Welcome to the Bigger Cash Flow podcast, where we interview business owners and real estate investors that share tips and tricks on how to grow your cash flow and reach financial freedom.
What's up, you guys? Welcome to another exciting episode of the Bigger Cash Flow podcast. Today, I have Antoine Martel of Martel Turnkey. He is a real estate investment expert from San Mateo, California. As a licensed real estate agent and experienced investor, Antoine helps new and seasoned investors realize their financial goals. Martel Turnkey has sold well over 3.5 million cash flowing properties since inception. Antoine is also a host of a Millennial's Guide to Real Estate Investing podcast, where he educates investors to realize passive income and reach financial freedom. With that, let's welcome Antoine to the show.
Thanks for having me.
Hey, how's it going, man?
Good. How are you?
Doing well. Very excited for this episode. Why don't we just dive right in and tell our listeners a little bit more about yourself and give us a glimpse into your personal life?
Sure. So been investing in real estate for 4 years now. Started back in college is when I really got interested in real estate investing. My dad and myself and my brother actually dragged me and my dad to like a real estate investing seminar about flipping houses. That really got us interested in real estate and real estate investing in general. Kind of took what we learned there and started applying it to California, which is ridiculous. We started looking at properties to flip here, and we were like, all right, we can put all of our eggs in one basket and hope for the best in our first real estate investment. And it was really scary for us, but we were super confident just with what we had learned. So we tried doing it over and over again, made 20 offers a month for many months and never got a deal under contract, never did anything. 2 years later, I was just spending those 2 years kind of just learning, since flipping houses wasn't working, listening to podcasts like this, reading books, doing all that kind of stuff, networking as much as I could to see how other people were investing in real estate with, less money than $2 million in cash. And what I realized was that investing out of state was the way to go. And so kind of with our limited resources, which was like $40,000, $50,000, I kind of was like, all right, cool. I can buy a house in Memphis, Tennessee, renovate it, rent it out, put a property management company in place, and then do a cash out refinance and keep doing it. My dad, has his own company. He doesn't have a 401k. My mom wasn't working at the time. So there was no like retirement plan. So this was kind of, while I was in college, I was like, okay, I can take my dad's money, a little bit of money that he has saved, and I can go and do this and build a portfolio for him. And that's kind of how the whole real estate investing thing began. Started growing a portfolio for the family. And then eventually friends and family started reaching out to us to buy our rental properties before we did a refinance. So that's when the whole turnkey company started. And we just pretty much, sold properties to friends and family. And then with word of mouth and making a little website, people started coming to us that weren't friends and family anymore. And that's when we had an actual business.
That's awesome, man. So in the beginning, you were just trying to solve a need, help your parents retire and have, more money. And you found a system that works, made sure, proof of concept, and then naturally it just grew into a business. That's awesome, man.
Yeah, exactly. Yeah. And the hardest thing is like, how do you invest in real estate with very little cash? Right. So, and that's kind of, what the point of my podcast is too, is like, how do you invest in real estate without $1 million or even $100,000 or $50,000? How can you invest with $10,000 or $20,000? Yeah. So it's a hard thing to solve and to answer.
Yeah, I resonate with a lot of that as well, because I'm from South Korea. So our parents and we all immigrated when I was little. And my parents, they started a small business, so they don't have a 401k. They actually don't have anything saved up for retirement. And a lot of immigrant families that I know and, befriended, it's kind of generally accepted that their children will kind of take care of the parents. At least it's kind of a wink, wink for me. My dad doesn't explicitly say, hey, Bo, take care of me. It's generally understood because he sacrificed so much for me. I want to do the same for him. So it's really awesome because I'm trying to figure out, okay, as I grow my rental portfolio, how can I help, him grow his as well? But for me personally, I'm trying to put my, emergency mask on first before I start helping him. But that's definitely in the future. And it's really awesome that you're doing that for your family.
Yeah. Yeah. Thank you. Yeah. And I mean, I kind of feel the same thing because I was born in Toronto too. So we, immigrated here as well in 2000. We got our green card, got our citizenship. And then it was like, all right, well, thanks for bringing me here and keeping me out of the cold. Um, so now, like, yeah, I kind of felt that same kind of thing. It's not really in I mean, Canadians don't really have much of a culture, but not really in our culture to, give back, or the children are going to take care of the parents or whatever. But yeah, it was something that I felt too that I needed to do. And like, if a parent sacrifices for 40 years of their life for you, then it's like, okay, well, I can spend the first 10 years of my adult life giving back to you for what you have done. Right. So
Yep.
that's kind of my philosophy as well.
That's awesome.
Yeah.
So take us back to the journey of when you first realized that, hey, Memphis or out of state markets really worked. How did you go about, other than, you went to RIA meetings, listened to podcasts, educated yourself from books. Did you just go out there and start doing it? Or did you by chance have a mentor who was kind of showing you the ropes? How did you go about doing it?
Yeah, good question. So actually, I networked my ass off on Bigger Pockets. Just had coffee with every single person I can possibly find on Bigger Pockets. You can go to Bigger Pockets, create a free account, go to the networking tab, type in your zip code, and just message people all day long, and just take anybody out for coffee. They may not help you now, but 6 months down the line, when you're actually doing something, they could be of use to you. So just take notes on everybody. Build up your CRM, build up your list. So I started doing that. And then through that, yeah, there were some people who were investing out of state, who were doing BRRRRs out of state. And then you ask them certain questions and you kind of go deeper down each rabbit hole until something, clicks and you're like, okay, well, with my resources, this will work. And then, there's only so much you can learn though through networking. Everybody has their own, financial background, and some people can't even get financing. Some people can get finance, right? So with us, it was a very unique situation because we couldn't even get conventional financing. We actually had to go through a local credit union to a cash out refinance because they're the only person that would lend to us without W-2. Right. So like everybody's situation is different. Whereas if you were doing a BRRRR and doing a cash out refinance, it's way easier for you to get the financing than for me to get it. So yeah, I mean, it was through networking, through tons of networking and asking the right questions and really doing your homework before you go into those meetings. And then, just keep meeting with as many people as you can. And then the most important part is just doing it, just realizing that you've learned enough to make that investment, to make that $20,000 investment, and to take the chance, take the risk. And then your learning's going to, double or triple once you actually make that first investment. And everything you've been reading is actually going to come to life.
Yeah, for sure. I think in Bigger Pockets, Brandon Turner, he talks about the triangle a lot, where you need two of the three, whether it be money, knowledge, or time. Time, aka hustle, right? It seems like you just like out hustled everybody in the beginning, setting up networking events and meeting people. And then as you got the knowledge, then money is not really a problem because you know what you're doing and it's going to come to you. So
not at all. Yeah. So what I did, again, my dad only had that $40,000 or $50,000 we started with. After that first project was completed, I made a case study, and then I went back to all those people I had met on Bigger Pockets. Hey, we met 6 months ago. This is what I started doing now, and I'm looking to buy the next house. Do you want to partner up with me and fund the deal? We'll do the cash out refinance, and we can hold it together. You can hold it, whatever. We'll split the profit. So that's how I went from deal 2 to deal 50 was through other people's money. I didn't have any cash. It was all through Bigger Pockets networking.
Nice.
Yeah.
When investors first begin, there's so much noise, right? Bigger Pockets is awesome for the wealth of knowledge that it has, but there is a lot of noise because there's a lot of naysayers, or there's just a ton of posts that sometimes may not be relevant to you. So, when figuring out what type of investing you want to do, whether it be buy and hold, fix and flip, Airbnbs, or wholesaling, how did you navigate through that and identify what works for you?
Yeah. And again, it was like learning about all those different assets, right? Or different avenues to go through investing, right? And there's like a million different ways. So you got to start with just choose a couple, choose the main ones, choose flipping houses, wholesaling, and then rental properties. Okay. Going back to Brandon Turner, do you have the time to do, which of those do you have the time to do? Do you work a full-time job? Okay. Well, then wholesaling and flipping houses are probably out of the picture. Unless you have a very lenient job or something like that. So then do you have the knowledge? But that can be easily attained as long as you know which path you want to go down. And then do you have the money? You can either get the money from your W-2 job. If not, whose money can you use and what are your resources of money that you can use? If you don't have anybody, then go meet people. And
Yeah.
if there's no you're not going to walk into a meeting and be like, okay, this meeting is going to get me 50 grand. You have no idea what the meeting will entail or how much money somebody has in their bank account. But if you come in with the knowledge and the hustle, the money is going to show up on, at the door. So
Yep.
kind of for me, it was learning about all those different facets or avenues of real estate investing. And then looking back at my resources and being like, okay, my end goal is retiring my parents, right? Flipping houses and wholesaling, you can help me get some cash to get there, but it's not really doing the end goal. So how can I do rental properties starting today? And that's kind of what I started to, the problem that I had. And then I just started to answer that problem through buying rentals and through the BRRRR strategy and different things.
Nice. You mentioned other people's money a couple of times, and I just want to re-emphasize for our listeners here who ask me questions, hey, Bo, how do I raise private capital? A lot of them are asking, hey, I have a good deal, but who would in their right mind give me, a stranger $50,000, $100,000? I tell them, you don't need to negotiate on behalf of that person who's about to give you money, right? Because once you get experienced enough and you do enough deals, you'll realize that there's a ton of money out there. There's a lot of people with IRA money, 401k money, just a lot of savings because they're scared to put it into Wall Street. And if you have a good deal, people will be lining up to give you their money. Put it to work.
I agree. Yeah, no, I agree. And it's like, yeah. And if you can come with the knowledge, answer all their questions, show them a proof of concept that you've done this before, and here's a very similar deal. I mean, money's as long as you just meet the right people and keep networking, I mean, people are going to give you. I was 22, 21 years old going and raising 50 grand from random people. And they knew how old I was. They knew this was my second deal. They knew all this stuff. So you have to make it enticing for them. If you are new and this is your first deal, then okay, maybe you need to split up the pie. Maybe you need to give them 50% of your deal. And maybe you can't just pay them a 12% return like I can, 100 deals in, right? But maybe you can, my first 20 deals, I split the profit because I knew it was the only way for people there's a risk reward factor. So, we was paying, now people are making 20 or 25% on their money instead of the 12, but they were willing to take the risk because they saw the reward at the end of the tunnel.
Awesome. So you mentioned Memphis. Are there any other markets that you're invested in, and how did you go about identifying these markets?
Yeah. So we're in Memphis, Cleveland, Birmingham, St. Louis, and Akron a little bit, but Akron's right next to Cleveland. We're in those 4 markets. The way that I found those markets is I just literally made a spreadsheet of all the markets in the U.S. The population's over 200,000 people or 250,000 people. And then what I did is I looked at rent to value ratios. I looked at population growth, job growth, major employers, diversity of workforce, and then kind of mapped it all out on an Excel spreadsheet and then kind of just gave points to each one, whatever had the highest number that I was kind of looking for, right? So the highest diversity or highest, price to rent ratio, et cetera. And then from there, I kind of just gave a scoring to each city. And then I kind of just went with the first city, which was Memphis. The second city was Cleveland. The third city was Birmingham. Fourth was St. Louis. So that's how I kind of got my markets. And it was just through a ton of homework, a ton of listening to podcasts like this, where people are like asking the same exact question.
Yeah.
And I just, aggregated 50 other interviews and then came up with my list. Okay, well, these guys are looking for this. I better be looking for this. And that's how I came up with my criteria. And then finding the information. I mean, it's all online through a variety of different websites that you can find all the information you need.
Yeah, I think it's actually a huge advantage being, a millennial in this day and age in terms of real estate investing, because I follow your social media a lot and it has a lot of great content and lots of tips and tricks that you share on your stories.
Yeah.
And because we are younger than our parents' generation, we are a little bit more tech savvy and we're able to use data to our advantage and, text messaging and, MailChimp and all these things to get deals done, right?
Yeah. Yep.
So I think that's a huge advantage, and it looks like you kind of did a little funnel in terms of identifying these different markets and make sure not to recreate the wheel. Because if there are a ton of experienced real estate investors having success in these markets, there's no reason for you to go out to like random tertiary markets and try to find something there, find like an oil well if people are already having success, right?
Exactly. Well, yeah, exactly. If people are all pumping oil in one oil field, and why don't you go to that oil field and start pumping oil with them and get 1% of the oil pie, then going to a brand new area where nobody's pumping oil and start digging, right? Like, just follow where people are already having success. Even if you're going to have a small piece of the pie, you at least know that there's other people who are doing it in a similar market. Yeah, don't recreate the wheel. Follow where people are having success. There's a reason why people aren't flipping houses, in certain markets or certain neighborhoods. There's a reason.
Yep.
Yeah.
And one thing I want to add is, because Antoine and I are both in California, when I first began, a lot of people are like, oh, California's, it sucks. I'd rather be in the Midwest. And if I was in the Midwest, I would gobble up all these properties. But I kind of look at it from a different perspective, where living in California, we have a lot of access to money. And, as W-2 workers, we also make higher wages than people in the Midwest. So by purchasing turnkey, for example, through Antoine's company, you're able to redeploy your capital in California back into a more efficient market in the Midwest. So why don't you tell us a little bit more about your company? You told us how it grew from just family and friends and how you're servicing your clients.
Yeah, absolutely. So again, we started with family and friends, and then it kind of grew from there. And then eventually instead of having an email to everybody, I just made a website and said, hey, go check out the website if you want. And then sent out a MailChimp email to everybody on the list. But then word of mouth started happening because people had success with it and they would refer their friends to us. So now we do a little over 100 homes a year. We're on track to do 100 homes this year. We buy properties, renovate them, rent them out, put a property management company in place, and then we put it up on our website. If nobody buys the property on our website, we just do a cash out refinance, hold the property ourselves. All the deals we have on our website are owned with our own money. We're not a turnkey broker. We're not selling other people's deals. All those deals you see there are houses that I would personally own. If nobody buys them, I have to do a cash out refinance because it makes the most amount of sense. So that's kind of how our business model works. We sell all of our properties with tenants in place. We give you the property management company, and then we'll help you get financing and insurance for all those properties as well.
Awesome. So for a newer investor working with a turnkey company, what are maybe one or two things, word of advice in terms of getting them mentally and really prepared?
Yeah. I would just say, look at the numbers for a deal that makes the most amount of sense, and then find a deal that has the most amount of work done to it. So, some of our properties are literally brand new systems, brand new HVAC, brand new hot water tank, paint, interior, exterior, brand new roof, right? So those things are like the epitome of turnkey. They don't need anything done to them, and they won't for 5 or 10 years, hopefully. So I would say just do your homework on the neighborhood, do your homework on the property, make sure you know what was done or what was not done so that you can budget that for the future. So it's fine if the roof is older, as long as you put it in your numbers for, I'm going to replace the roof in 3 or 5 years, right? So just put it in your numbers, know what the numbers are. And then for us, it's act fast, because the deals for us, as soon as their professional photos are up on our website, then the deal really sells pretty quickly in a couple of days. So yeah, that's what I would recommend. And yeah, as long as you have W-2 income and $20,000 in the bank, you can get approved for these rental properties, because the mortgages are super low. Like they're, $50,000 or $40,000. Because our price range that we sell the properties is anywhere from $70,000 to $90,000.
Gotcha. So let's just take an example, city of Memphis. You
Sure.
have $70,000 to $90,000 homes. What class neighborhoods do you think they are considered? And what are some considerations when you're actually going in to renovate these properties? Like, are you replacing everything, with less than 5 years useful life? What's the thought process behind it? And who manages them?
Yeah, good question. So the property management company is all third-party property management company. So again, when I went out and built my family's portfolio, these are the same property management companies that I hired. I still use them today. In Memphis, they manage my apartment building in Memphis that I own. They manage all my single-family portfolio that we still own today. And then so you're going to be referred to them at the time of closing. In terms of the renovation, so yeah, if something only has 1 or 3 years of life on it, if the roof's in bad shape, then we'll just replace it. the thing is, like, if it has a couple years of life, like 3 or 5 years of life on it, then we'll just get a home warranty for the property and pay that for the buyer. It's just cheaper because if you have like a furnace and a hot water tank and an HVAC that are all, maybe have 5 years of life or 3 years of life, it's cheaper to get the home warranty, in my opinion, than to go and spend 15 grand to replace all the things. So that's kind of what we do. I just make sure that the new owner is not going to have an issue in the first year or two with those major systems. And if they will, then I'll just protect them with that home warranty. Your last question. So typical numbers are going to be for single family home in Memphis, Tennessee. You'll buy it for $70,000 or $75,000. The rents are $725 to $750, $775. You're going to have taxes, insurance, property management, which charges 10%, and then your debt service. So typically the returns are anywhere from 15 to 17% cash on cash after financing, without holdbacks for maintenance and vacancy. So just on a perfect month, you'll make 15 to 17% cash on cash. When the cash flow dollar-wise is going to be anywhere from $200 to $250 per month for a $20,000 investment.
What are ways that investors can protect themselves, and what are some red flags that they should be looking out for when working with a turnkey provider?
Yeah, great question. Yeah, I know there's a big lawsuit going on with one of the big guys. Do your due diligence on the neighborhood. Do your due diligence on all the items that were renovated that the turnkey provider is telling you. I would always recommend getting conventional financing for properties. If you do have W-2 income, get the conventional financing. The reason why is the bank is going to lend you 80% of the deal. So they have more money in the deal than you even do, right? You're coming in with 20% down and going to buy this asset. The bank is going to verify that house is in good sound condition, that it's worth that amount of money. You're going to pay for the appraisal, but they're going to do an appraisal. You'll see the appraisal report and verify that house is actually a house, that it's not boarded up, that it has a tenant in place, that the foundation is okay, and that the property is worth that dollar amount. So appraisal is number one. Always put the bank is now on your team, right? Because they're funding 80% of your deal. So they're kind of one person that you should have on your team who's going to verify that house is actually a house and not a piece of land. And then the second thing that you can do if you want a double protection, is to actually hire an inspector. So for us, like for our clients, if they'll get the appraisal done and then they're like, okay, I want to have an inspector. So I'll give them my inspector that I use when I buy the houses. That inspector will go through the house. It costs like $300 to have the inspector go through. They'll give the client the report, and then the client can see, okay, yeah, like the HVAC is 8 years old or 10 years old. The water tank is 2 years old. The roof looks to be in good shape. There's no active leaks. Okay, that's fine. Right. So then you can really verify what I'm telling you I renovated with the actual inspection report. Make sure it lines up. And make sure that you're budgeting for all the things that come on the inspection report, which are not renovated, and stuff like that. So yeah, those are like two ways that you should be protecting yourselves. And you're having two people who are now on your team go and walk through and verify, especially if you're going to be an out-of-state owner. You need somebody on the ground who's going to be on your team, right? And sometimes not all turnkey providers are going to be on your team.
Yeah, no, I love that. And I appreciate the candid answer. That's actually my answer when, somebody asked me on one of the forums, is that get an appraisal, because by doing that, you're having an independent party verify those facts. And you can, aside from the appraiser, the inspector, you can have your broker go in there. And believe it or not, there are a lot of people on Bigger Pockets who, if you build a relationship with, they'll be more than happy to go check out your property if they're in the area. And just by looking at it from the outside, they can verify that it's not just out of land. Because one of the example was on Bigger Pockets, when I made a trip out to Indy, I had made a friend out there, and I went to go check on his property, and it was empty, and he thought it was tenanted. So that was a huge red flag. I reached out to him immediately, and he fired the property manager, got a new one, and got it stabilized again. But those are some of the things that out-of-state investors might have to deal with. Yeah. So of course, due diligence doesn't prevent fraud. If people are making up tenant lease agreements, things like that, you can't prevent that. That's fraud. But if it's, lack of getting independent people to verify your property, that's on you.
Yeah, I agree. And that's why I like, not to toot my own horn, but that's why I like that I have the third-party property management company. Because it's not like I can't now, like they're speaking out of their mouth. It's not like I'm saying, oh, here's a property, here's what we did, and here's a lease, and here's the, it's something coming from somebody else too that's verifying what I'm saying. You can go call the property management company, ask them for the lease. They'll send it to you, tell them you're the new buyer, right? So it's like there's like these checks and balances that I've kind of set up so where like people can go and validate what I'm saying to show that it's actually true. And then a lot of turnkey guys, when they get really big, they bring it all in-house, right? Which is what happened here.
Yep.
But then there's no more checks and balances. Everything is under the same roof. Everything can come out of the same mouth. I don't even have the lease agreement, in my, table of documents. I can't write up a lease agreement. But if you have it all in-house, well, now you have access and you can write or make up whatever documents you want to with the different logos, right? I have no ability to do that. I'm pulling documents from these third-party people. Yeah.
Awesome. So, I kind of want to segue this conversation into scaling your portfolio. And
Yeah.
I know you recently restabilized a 20-unit apartment building in Memphis, and I want to talk a little bit about that. So as investors, as we're picking up these, single-family duplexes and scaling up, a natural segue that I see is investors like to pick up multifamily.
Yeah.
And, it looks like you picked up a nice 20 unit in Memphis. Can you tell our listeners, how you acquired it, what the plan was, and how you analyzed the deal?
Sure. Yeah. And if anybody wants like a copy of the case study, you can actually go and DM me on Instagram. It's Martel Antoine. Just DM me your email and I'll send it off to you. But yeah, so we bought an apartment building. I bought it last year, 2018. Bought it for $1 million. Renovated it, put $200,000 into it. Increased the rents from $560 a month to $850. So it's like almost a 50% increase that we made to the property in terms of rental income, which therefore drove the value of the property way up. So I found it through just a broker relationship. So I was looking to get into the commercial multifamily space. I called every single broker and, just hustling. Called every single broker in Memphis, said, hey, I have a turnkey company. We sell 100 homes a year in Memphis and other markets. We have some cash ready to go. Here's my proof of funds, and here's what I'm looking for. Did that every single week for 6 months. A deal finally hit my desk that made sense. I had the cash, and we just put it under contract, and the numbers ended up working out. So we ended up closing on that, and now we're still renovating some of the units, but yeah, it's almost fully updated, fully rented out.
Awesome. I love how that $1 million just rolled off your tongue. Like, I bought it for $1 million last year. Can you imagine when you first started, you're like $50,000 might seem like a lot of money, but now it's like you're doing bigger and better deals.
It's crazy. Yeah. And we put like 35% down on that deal. So we put a lot of money down, and we're writing that check and we're like, oh, wow. Okay. Well, it's like going from the turnkey side where we started and making $200 a door to, renting out a unit for $850, times 20 units. It's a lot of money that you're collecting every single month. And yeah, I mean, if you told me a couple of years ago that I would be doing this, I would say, I'd laugh at you.
Yeah, that's awesome.
Yeah.
I think you're a prime example of, one of my favorite quotes from a real estate investor is, go as far as the eye can see, and once you get there, you'll be able to see further.
Yeah. I like
seems,
that.
Yeah, it seems like that's exactly what you're doing. You're just hustling everybody, out hustling everybody, I should say. You're going as far as you can see, and then once you get there, you're just doing bigger and better things.
Yeah. Yeah. And it's like an every year thing too. Like, last year my goal was to do 25 projects and I did 60. And then
Wow.
I was like, holy shit. Okay. Well, I did way more than I thought I would. And then, then this year my goal is to do 100 single family homes and 100 units of apartment buildings. And I'm working on doing a 50 unit right now. So, and it's only April. So, I'm almost halfway on that goal. And then the apartment buildings were on track. The single families were on track to do it. And then, if I hit that goal, I don't know what the hell I'm just looking at this year, and I stay really focused and stay in my own lane of the stuff that I know. Right. So like I'm doing single family home, affordable housing, rental properties, and multifamily, but I'm not doing like, retail or mixed use or, there's so many things that could cloud you to get you off the track. But, setting that point way out there, which is like, let's say 10,000 apartment building units, and then just keep working every single year to get to that goal. and just one step at a time and every year at a time to get to that goal and not getting off track. And because with real estate, like you said, like bigger pockets, you could spend all day on there and you'll learn about every single damn strategy that everybody's using, but find one that works for you and just stick to it. And that's when you're going to really see the payouts, because now you're going to have way more knowledge than anybody else in that small little niche.
Yeah, no, I got to be honest with you. When I first started, I definitely had shiny penny syndrome.
Yeah.
So I would figure out, okay, I want to be a buy and hold real estate investor. Then 2 months later, I go to a wholesaling, flipping seminar. And I'm like, okay, I'm going to be a flipper now.
Yeah.
And then I go to like an Airbnb meetup and I'm like, oh shoot, I got to do an Airbnb in Kansas City. It's perfect. And it's crazy. You got to stay focused. Like you said, stay in your lane and you'll find success. It's about consistency, right?
Yeah, I agree. Yeah. And I just hired a sales manager for the Martel turnkey side. And yeah, when she came in, she was like, oh yeah, single family homes are great, blah, blah, blah. And then, the next week she'd come in, she'd be like, all right, so I listened to this webinar and like, we totally need to start doing this. And I'm like, no, we're doing single family homes. We're doing, like stay focused, stay focused, stay focused. And I mean, that's how it is with a team too. It's like, when you have all these different people going out to these networking events, then you guys come back the next day for a meeting or whatever. And then you're like, all right, well, at this meeting yesterday, we need to convert one of these single families to an Airbnb and we need to do this. It's like, you just have to keep looking at the shining star at the very end of the tunnel. It's like, all right, is that going to help me get to my goal of 10,000 apartment building units? No, it's not going to help me. So therefore I need to just do what I've been doing, which has been successful. Why am I going to take the risk to do something else and to make a little bit better of return? I'm already making a great return on my money. Why am I going to take the risk? So.
Okay, awesome.
Yeah.
So we covered a lot of ground today, and we're definitely going to need to have you back on the show to share more of your wisdom. But, before we wrap this up, I typically ask our, guests, words of wisdom or advice for our listeners, but I kind of want to switch it up because you seem to be a great networker. And I see time and time again, a lot of people going to these networking events, maybe switching a couple business cards, but not doing anything about it, right?
Yeah.
So can you share your single best piece of advice of, following up on leads and really making the most of these networking events?
Yeah. So networking events, the goal is to give out and talk to as many people as you can with just a couple of sentences. You don't need to listen to the person's whole life story. And I would just do targeted networking. So most of the networking events that I go to, they'll have like a little introduction at the very beginning, right? So everybody's going to say their name, where they're from, and what they do, right? So then, from that list, then pick out 5 people and you're like, oh, okay, I want to talk to this person. I want to learn more about what they're doing. If you're first starting, I want to talk to them about this thing. Then after the end of the networking event, just go up to those 5 people, be like, hey, I love what you're doing with the blah, blah, blah. I'd love to have a coffee with you. Here's my business card, exchange phone numbers. And then the follow-up is the one thing that I do not understand when people go to networking events. And I'll give out 40 cards and then I'll get 2 emails 3 weeks later from 2 of those people. And I'm like, why did nobody else, it's just the follow-up part that people are not acting on. So really, like, whenever I go to the networking events and I collect cards, I come back that night and I do it because that person's face is fresh in your mind. What they said is fresh in your mind, and you can set up something for that week or the week after. So it just goes back to just hustle and get those people on your calendar, meet with those people, do what you say you're going to do. Yep. And don't just put it off. Because if you put it off, then they're just sitting on your desk for 4 weeks, and then you look at the cards, you're like, I don't know who the hell these people are. Yeah, because you could have done it 4 weeks ago. They don't know who the hell you are now too. So, going and replying to those, there could be so many more deals done if people went home and emailed the cards that they received.
Yeah. I just want to reiterate what you just said there. Do what you say you were going to do. I mean, as simple as it sounds, if you just do that, you're going to find a lot of success. If you tell them you're going to get back to them via email in 3 days, get back to them in 2, or at least by the 3rd day, and you'll build more trust with them and they'll want to work with you.
Oh yeah. If somebody, like, for example, I was at a networking event, somebody just came and walked by, hey, can I get your card? I want to send you an email, but I have to run. Yeah, sure. Here you go. He's like, all right, cool. I'll email you tomorrow morning. I don't know the guy's name. I don't know whatever, but you better be damn sure tomorrow, the next morning I was looking at my email like, why where is that guy's email?
Yeah.
And then boom, there it is, came in. Okay, cool. Now I'm willing to spend time to talk to this guy. If it came in 2 or 3 days later, I'm like, what's going to happen when I set up a meeting with this guy now? And is he going to show up? Is he going to delay? Is he going to, flake on me? So yeah, doing what you're saying you're going to do, or do better than what you say you're going to do.
I love it.
Yeah.
All right. So that wraps up our show for today. If you thought that was helpful, please do us a huge favor and leave us a review on iTunes. We'll see you right back here next week for another exciting episode of the Bigger Cash Flow Podcast. Thank you for listening to the Bigger Cash Flow Podcast. Please remember that opinions of the guests are their own, and nothing on this show should be considered personal or professional advice. Please consult your tax, legal, or financial advisor for personal advice that fit your unique situation. See you next time.